Dear students, welcome you all to this session, pre-recorded classes on 2nd PUC Accountancy. Due to COVID-19 pandemic, as regular class commencement is postponed, we have to adjust ourselves to the alternative classes till the commencement of regular classes. So, I hope all of you will cooperate and engage in studies regularly. In case of any confusions, you can clarify the same later. Let me begin the session with a brief idea about the syllabus coverage. 2nd PUC Accountancy syllabus, which is revised and reduced due to COVID-19, is as below. In the first book, first chapter that we have to study is Accounting for Not-for-Profit Organization. Second chapter which we have to cover is Accounting for Partnership, wherein we have to understand about the basic concepts in the preparation of books of accounts of partnership organization. Third chapter which we need to understand is Reconstitution of a partnership firm, wherein we have to learn about admission of a partner. Fourth chapter that we have to learn is Reconstitution of a partnership firm, wherein we have to understand accounting treatment relating to retirement and death of a partner. Fifth chapter that we have to study is Dissolution of a partnership firm. And in book 2, we have to understand chapter 3, Accounting for Share Capital, wherein we have to understand about features and kinds of companies. Third chapter that we need to cover is Financial Statement of a Company, wherein we have to understand meaning, nature, objectives and types of financial statements. Chapter number 2, 4, 5 and 6 are removed from the syllabus. Dear students, please make a note of it before we begin with the topic for 2nd PUC Accountancy. In 1st PUC, you have studied about the preparation of final accounts of a sole trading organization, wherein you have learnt the preparation of trading account, profit and loss account and the balance sheet. As per the syllabus coverage of 2nd PUC, we have to understand about various aspects involved in preparation of accounts relating to not-for-profit organization. The coverage is meaning and characteristics of not-for-profit organization, accounting records, receipts and payments account, income and expenditure account, balance sheet, peculiar items that we need to understand are subscriptions, donations, legacies, life membership fees, entrance fees, sale of old assets, sale of periodicals, sale of sports materials, honorarium, payment, endowment fund, government grant and special fund. Initially, let us understand about what are not-for-profit organizations. Organizations which are set up for providing services to its members and the public in general are called as not-for-profit organizations. Such organizations include clubs, charitable institutions, schools, colleges, religious organizations, trade unions, welfare societies for the promotion of art and culture. Service is the main objective of not-for-profit organization and not the profit as in the case of other business concerns. They do not undertake any business activities and these organizations are managed by trustees. These organizations are the organizations which are established for the welfare of the society and which are set up as charitable institutions and which are functioning without any profit motive. As it is already said, the major objective of not-for-profit organization is to provide service to a specific group or the public at large. They do not manufacture, purchase or sell goods and may not have credit transactions. They do not manufacture, purchase or sell goods and may not have credit transactions. Now let us understand about the features or characteristics of not-for-profit organizations. Dear students, these organizations are formed for providing service like education, healthcare, recreation, sports and so on. The aim is to provide service either free of cost or at nominal cost and they are formed not for earning profits. These organizations are organized as charitable trusts or societies and subscribers to such organization are called as members. These are managed by managing or executive committee elected by its members. Coming to the source of income of not-for-profit organizations, subscriptions received from the members, donations received, legacies received, grant in aid and income from investments and so on. Funds raised are credited to capital fund or general fund. Not-for-profit organization collect funds and which are credited to capital fund or a general fund. Surplus which is generated is not distributed to the members but added to the capital. Excess of revenue over expenditure is called as surplus which is added to the capital fund. They earn their reputation on the basis of their contribution to the welfare of the society rather than on the customers' or owners' satisfaction. Accounting information provided is meant for the present and potential contributors and to meet the statutory requirement. We need to understand about the accounting records which are to be maintained by the not-for-profit organizations. Most of their transactions are in cash or through the bank. These organizations are required by law to keep proper accounting records and keep proper control over the utilization of their funds. Cash book is a book in which all receipts and payments are duly recorded, and they also maintain ledger containing the accounts of all incomes, expenses and assets and liabilities, which facilitates preparation of financial statements at the end of accounting period. They also maintain stock register to complete record of all fixed assets and the consumables. Let us understand about final accounts or financial statements. All of you have learnt about preparation of final accounts of sole trading organizations in your first PUC, where you have understood about the preparation of trading account, profit and loss account, and the balance sheet. In case of not-for-profit organizations, financial statements include the receipts and payments account, income and expenditure account, and the balance sheet. These organizations are also required to prepare financial statements at the end of each accounting period. Therefore, you need to know about these three aspects without fail: receipts and payments account, income and expenditure account, and the balance sheet. Before we understand about these in detail, let us have an idea as to capital and revenue items. Capital items includes capital receipts and capital expenditure. Capital receipts are the receipts which are not repetitive in nature and they are received once a while. Example for capital receipts are life membership fees or specific donations received or any special funds received for specific purposes. Capital expenditure are the expenditures which are of non-recurring in nature or not repetitive in nature. The benefits of such expenditures are received for a long period of time. Examples for the same are any expenditure incurred on purchase of building or construction of a building or purchase of any kind of fixed assets. When we understand about revenue items may be revenue receipts or revenue expenditures. Revenue receipts are the receipts which are repetitive in nature. Membership fees received annually from the members, subscriptions received, grants received, donations received are the examples for revenue receipts. Amounts received for giving benefits and which is repetitive in nature are called as revenue receipts. When it comes to revenue expenditures are the expenditures which are repetitive in nature and money spent and benefit exhaust within a year. Examples for the same are wages paid, salary paid, as well as any other kind of money spent for which benefit exhaust within a year. Let us now understand about the first account that we have to prepare for not-for-profit organizations is receipts and payments account. It is the summary of cash book and it includes cash and bank transactions which helps in the preparation of income and expenditure account and the balance sheet. There is a legal requirement to prepare receipts and payments account and submit to the Registrar of Societies along with the income and expenditure account and the balance sheet. It is prepared at the end of accounting year on the basis of cash receipts and cash payments recorded in the cash book. It includes all cash receipts and cash payments made during the year, whether it relates to the current period, previous period, or succeeding year. And it includes both capital and revenue receipts and payments relating to the organization. What are the features of receipts and payments account? It is a summary of cash book. All receipts are recorded on the debit side, payments are recorded on the credit side. It shows the total amounts of all receipts and payments irrespective of the period to which they relate. It includes all receipts and payments, whether capital or revenue nature. There is no difference between receipts and payments made in cash or through bank. Non-cash items such as depreciation, outstanding expenses, or accrued incomes are not shown in this account. It begins with opening balance of cash in hand and cash at bank and closes with the year-end balance of cash in hand and cash at bank, which will be recorded in the balance sheet on the asset side at the end of the accounting period. What are the steps involved in the preparation of receipts and payments account? First of all, take the opening balance of cash in hand and cash at bank and enter them on the debit side. If there is bank overdraft, it should be entered on the credit side of this account. Show the total of all receipts on its debit side and all payments on the credit side, irrespective of the nature, whether capital or revenue. Receivable income and payable expense should not be entered as there is no inflow or outflow of cash. Find out the difference between the total of debit side and the total of credit side of the account, and the balance will have to be shown in the balance sheet as cash in hand or as cash at bank. Thank you one and all for watching this session, and further details regarding income and expenditure account will be looked into in the next session. Thank you.